Greetings to you options traders. It is Monday, April 5th, 2021, and I kind of want to pick up where we left off. On Friday, there was a market holiday, and I was trying to respond to a viewer request regarding using long calls as a investment strategy, a trading strategy. And this is option theory, right? I kind of feel like since we're simulated trading, why don't we put the whole strategy to the test? And since I'm not getting a lot of people suggesting underlyings to try to trade, I figure let's actually do this on Mondays. I'm going to buy some calls, right? Let's see if we can come up with a system. Let's see if we've got the special sauce. If you feel like you have a sort of indicator or system that you use that works out well for you for buying calls, please share it if you'd like to. I'd love to test it out and see what you got here, but it's contrary to what I've learned and what I've been doing, but that's okay. We should always be trying to grow. So if you're interested in testing this out with us, stay tuned because we're going to hop on in to Thinkorswim. Hi everybody, my name is Neil, and of course this is Option Theory. I do appreciate that you are here with me today. On screen here you can see we've pulled up Thinkorswim's simulated trading, also known as paper money, and we're in the IRA version of this paper money here because we're going to be doing long calls, which are IRA friendly, not like short calls. Right? So we can see here we've got 3 positions here in the IRA. The IRA is typically where I've done some playing, my playground here, where I'll come up with alternative trades to the ones we've been doing and just see how they go. Of course, they have to be IRA friendly. Anyway, we've got XL here is just kicking our butt, but luckily we've had some luck recently testing out some simulated stock positions or synthetic stock positions in SPY. So I've got 2 trade ideas today. It's going to be a twofer. A 2 for Monday. All right, so let's go ahead. We're going to do, what I'd like to do is do a synthetic stock position in one underlying and do a long call that's 50 delta. So we're going to do 100 delta or nearly 100 delta position using synthetic stock, which is the same risk profile as a long call, right? And we're also then going to look at doing a 50 delta long call. 2 different underlyings though. So here we go. Let's go on over to the charts. You can see Starbucks is going to be one of them. That's actually not where I want to start. I want to start with SPY. Good old SPY. We're at the high with the SPY. And so, naturally, this is not a place where I would want to be bullish. We can see futures here are giving us, looking like it's team green for the day. Unless you're in oil, like I am, it's going to be a little bit of a red day there. But here we go. Let's take a look at the Analyze tab, Add Simulated Trade. We're going to look at the 45 days to expiration May monthlies, 46 days to expiration. We're going to go down to the At the Money, and we're looking at, so the bid ask right now is 42.66. I want to buy just slightly out of the money. We'll call it at the money. Pardon me. And then I want to close this. And I want to look at here is the 403 buy on the call. It's roughly 50 delta, which is going to cost us $735. And then let's go ahead and, by the way, notice that we're at 1 contract. And what we want to do is go to the risk profile here. Set the date in the top right, the date we see in the bottom left, which is 5/22. That's awesome. Let's spread that out. Boy, anybody else's allergies kicking their butt right now? My allergies are getting to me. All right, so there we are. Let's hit this price slice, my goalpost, to break even at expiration. And that's not usually good at expiration, right? We want, when you're buying options like this, when you're buying premium, you want it to go your direction right away. Okay, and allegedly there is positive drift to the market. One can certainly see it on the chart. So that the days that it goes up should be, more than the days that it goes down. Let's test that out. I mean, if that's the case, we should be winning every time we do one of these, right? So let's see what happens here. You're going to buy this one. Expiration profit potential or probability is only 36%. That's not awesome. But maybe our there's no real P50 because we're paying a debit for this, right? And it's not like there's a maximum, there's unlimited profit potential, right? Ooh, so there's no like, what's 50% of them of unlimited? Can you tell me that one? Tell me that one. All right. There we are. We're going to go ahead and give this one a buy. I'm going to right click this one, choose confirm and send. Our max loss is the debit we pay for it, and our max profit is infinite. Boy, that sounds cool. That's different than we normally do, right? Where it's like we flip that, where we have defined profit and infinite risk. Yikes. All right, so let's go ahead and hit send. We're going to put that into working orders, and let's take a look at the second trade today, where we're going to try to take a synthetic position. So let's go back to SBUX. I am bullish on caffeine always. Are you bullish on caffeine? I love me some caffeine. So we are also near the highs, not at the point where I would particularly be bullish, but like I said, I'm bullish on caffeine always. I'm going to go make me some caffeine. It actually happens to be Starbucks. Hazelnut. Delicious. We're going to have that after this. I hope you have some delicious coffee or tea if that's your thing. But we're going to go over here to the Analyze tab, and we're going to look at Starbucks. We're going to once again as well go to the May monthlies with 46 days to expiration. Now, you might be thinking that this synthetic strategy here that involves 3 legs is why do you need to do 3 legs when you can just buy one at the 94 and have a very similar delta, right? And I hear you. But the reason I feel that that's, I gotta get these backwards here. I want delta and open interest to be reversed. But anyway, you'll notice that there's not a lot of open interest. There's not a lot of volume in this area. Compare that to when you're doing at the money in the calls. Plenty of open interest here. At the money puts, right here, we're looking at plenty of open interest. Not as much as the calls. A lot of speculation going on there, huh? All right. Or a lot of people covering their shorts. Anyway, you come down here and you got more open interest in the puts down here. So rather than just trying to buy the 94 call, what we're going to do is look at this synthetic strategy of we're going to buy the 50 delta, roughly 50 delta call. There it is. I'm going to hold down the control key while I do this to make a combination here. And then I'm going to sell the 50 delta put. Okay, it doesn't give you a buying power effect on this one, right? Which should be $11,000, right? There you are. Should be roughly that. Notice that our delta is roughly 100, right? So it's like we are long stock. If you look at the risk profile for this one, it's, long stock. You have unlimited profit potential. You have, if it goes to 0, you lose everything, right? But the problem is this takes up a lot of buying power in your account. How can we reduce that? That's the cool thing about this, right? So what you then go and do is while holding down the control key, you find the roughly 5 delta. We could do the 8, we could do the 4. Let's go with the 4 and see what happens. Or this one has more open interest. So let's try the 8 actually. I'm going to go ahead and buy the 90 put. Okay, so here we are looking at potentially collecting a credit. I find that is probably not likely going to be the case. We're looking at almost 100 delta. We're looking at a 98. You could go the 96 too if you want this one, but I want a little bit more open interest one. Should improve the liquidity on that one. Let's take a look at the risk profile on this one here, right? So should this go, actually I'm going to condense this. Right now, our max loss is 1,900. So that is the buying power effect. Rather than the 11,000, we're looking at a $1,900 or let's call it $2,000 buying power effect, right? A reduction with unlimited profit potential. So this is the synthetic stock position I think we'll be likely to take. Same profile as buying. So by the way, look at this, right? I want you to see this picture. I'm going to go ahead and do the long 90, where was it, 94 here. I'm just going to buy this one. It's going to cost $2,500. That's the buying power effect for this one. Let's take a look at that risk profile. Just about the same, right? So I'll use less buying power effect with this other one. Yes, it'll cost me a couple more in commissions, right? But anyway, let's go ahead and go back to where we were. I wonder what your thoughts are on the synthetic. position here. Like it, don't like it. I'd love to hear from you. It would be super cool. And then I'm going to go here and buy this one. I think I said it right. There we are. I'm going to right click this trade, choose confirm and send. We have infinite profit potential. We could potentially lose $2,000. But there you have it. Synthetic long stock position. Similar risk profile to buying a deep in the money call rather than buying a 50 delta call. Let's see how these perform and test our theories, shall we? Let's hit send, and there we are. Okay, everybody, thank you so much if you made it this far into the video. Thumbs up to you. I do appreciate you. And if you are new to this channel, this is where I want to tell you how you can join us, because this is intended to be an interactive channel. I would love it. I think you will benefit the most if you get in and you're clicking and you're flying the plane too. It's, you know, we should treat the paper money like real money, because someday, hopefully, it will be your real money. But you should test it out here. So there's 2 steps to how you can join us and do this, right? Step number 1, go down to the description below. You'll find the Cherry Bomb email sign up page. There's a link there. We do mostly Cherry Bomb trades 4 days a week here. Mondays are sort of our wild card day, but now we know Mondays are going to turn into these, for at least for a while, long call strategies, and see what we can do with that, right? So that's step number 1. Step number 2 is when you're ready, subscribe and ring the bell, because options trades have time value. That's important. And I think I came up with a step number 3 on this one. Step number 3 is I've got a playlist for getting started with Thinkorswim. If you're new, then you want to check that one out. I recorded it about this time last year, so it's relatively fresh. I mean, Thinkorswim hasn't changed that much. All right. But as always, I do appreciate your views, your likes, and your subscriptions. So thank you so much. And until I see you in tomorrow's first Cherry Bomb trade of the week, everyone, may the market be with you.